let's clear this up and start from the beginning very quickly. We'll look at the weekly time frames. Let's just assess some of the key points here that the market might want to target on the higher time frames, and then we'll take it from there. So let's start with looking at some of the key points here that the market has recently shown to be resistance, and just literally focusing on resistance points here that the market might find as support. So that would be a very nice zone potentially in the long run. And then on the upside, I would like to look at past support points like there. So that's already acted as a target for this market. And then we can see there's some past support over here that became resistance that could find, and then here. So that's kind of really where we focus. That's it in a nutshell. Okay, see how quick that was. So you can see there, this is where the market's at, and right now the market has essentially gone through this line. We've got this piercing line candle formation. We found this old support that became resistance. It's pushed back, and now we could be looking at potentially this here as a support point, and I could even push this up a little bit because I do like that there. But let me just check and see where the 618 is. So we always want to see where is the 618 of this move. We'll draw our manual fib there, and we'll see what it looks like. And the 618, we've just reached it. So we're just there right now. That's a good sign, 72.36. So we're kind of in that zone now of potentially the buyer stepping in on this. And it's quite nice that we're on this line as well. Can you see, guys? Like, look, resistance, 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 resistance. That looks quite a nice area. I do like the fact that it's this level, bullish candle there, and then it's kind of testing. Now, so let's, if we kind of go through this, then we're looking to really for this market to go down here, and then we'd be looking for a potential bounce. So that's the higher time frame in a nutshell. Let me see if there's anything else that I can spot here that's going to be useful for us. So we'll get rid of this because it messes my charts up, and I will see if there is anything else here. So let's have a look. So where is the market reacting? So we'll see if the market is liking that. I think that is slightly better. Let me have a little look around. Yeah, it's quite nice in general. Yeah, so I'd probably put that there. So that's, if it does bounce up. One thing I didn't make a note of, guys, is the target. So where is the 1618? Let's have a look. Oh, look at that. The 1618 is literally on our line, 77.37. So that would be a nice swing trade long if we were to get that. Okay. So yeah, that would be a really nice push towards here. Obviously, if it goes back deeper, then we'd be looking at a lower target. So for those that understand how the fibs work, let's take this line also and project. That's quite interesting. I just wonder there if we're going to kind of just push a little bit lower and touch that line there, maybe towards 72, and then potentially have a little bounce. I like that idea. So with that being said, I think we brought this up last time, and we spoke about the odds of it going from here to here, and it kind of did that, pretty much reached that trend line. Now it's coming off. Let me bring in plain template. So this is a 4-hour time frame. We can just quickly look at the daily chart as well and see if there's anything else here that is important. You can just put in your, I can just quickly put in my levels just to see if there's anything immediate. That one there, 75, that's a clear bit of resistance. So you can just get rid of them once you put them in. So you've got that level there is obviously reactive as well. 71, 77, 71, 78, that kind of level. It's good to know it could. So let's just quickly check the fibs on that, guys. If we took a high to low and it went down to there, where's that pullback? Hold on. That would be a 786-ish, which would take you up to the, oh wow, look, that's perfect. That's literally textbook. So we've got 7, look, if it goes here, I'll tell you what I'm gonna do. No, it's fine. I'll just stick to the, I'll stick to this, it's fine. So, one second. Let me see if I can just do it with the, because it makes it clearer. Yeah, I think we've got enough. We've got a potential really nice setup here, guys. I'm going to share. Doesn't always happen. Don't know if this is the, no, it's the wrong one. It's missing. Yeah, no, that's fine. I've got the wrong. I haven't got the latest script, but it doesn't matter. You can see now it's color coordinated. And if I bring in my pen, let me explain what this means. This basically means that if this market does an A, B, C right on this daily level, which is the yellow line there, right? So we color coordinate them. So if this kind of comes down here, and remember what we looked at before was a weekly chart. So it's almost like a test on the weekly, and then look, you've got a double level here. So that takes you up. So a very nice buy entry for me, in my opinion, will be around this sort of area here, somewhere around 71.80 would be a great buy zone. But anywhere kind of from here to here, you could start accumulating, and you could have a target of 75. Now, if I just go back very quickly to the weekly time frame, so let me just make sure I go back, so in case people didn't. So it's around the ideal entry 71.80 to 75.75, but of course it may not get there. So you can look at the low time and start accumulating if you want to play a swing trade. So you just dollar cost average in and make sure your stop is either below this A, or if you want to be really, really conservative, you put it below this massive block here. So you can put your stop a bit wider. It increases your probability quite a lot. In case, because look, the markets love to do this, don't they? Where they take out a low and then go. Seen that so many times. So you could just average in if you wanted to. You could even leave some on the table here for a swing trade with a stop there. That's the kind of passive income swing trade. That's very easy to do, but you'd want to increase your risk on something like this because it's going to take a little bit of time to actually fulfill. So you might want to sort of, if you normally do 1%, this kind of trade, really you'd be looking at something like 3%, because it's just going to take too long. So if you did 3%, you might be making, say, all in all, maybe 6%, for the, you know, which is close to your monthly target of 10. Let me see if there's anything else I want to share there. No, so just have in mind 75.75. If we go back to that weekly chart, let's have a look and see in a different color, maybe where's 75.75. Now I want to ask people why they like that. What is it that appeals to you about that target? Because straight away there's something there that I immediately think, great, that yellow target. And then if I just make this this is the ideal entry. Okay, this is the ideal entry, 71.80 there. Boy, do I love that a lot. And for those that have been following me a long time, they know that if I say I love something, it means I really do love it, because it just ticks all the boxes.
So tell us why. Tell us why for all the newbies there. I'm sure even some of the intermediates and maybe even advanced are scratching their head right now. So
yeah, well, you've got sorry, mate. Yeah.
No, go ahead.
No, absolutely. I will.
You're in a peak performance state, mate. Don't want it to stop the flow.
Absolutely.
You're in a peak performance state.
So there's a couple of things. One, it kind of really, you know, I mentioned before, like, oh, maybe it will go down and test this this market angle line here, maybe a little bit lower. And then when I looked on the daily chart, it made a lot of sense that it might do that, because it's on a daily level, and then the fib target, the fib pullback gives you a perfect double level daily target, which often means the market will just get sucked back in there. When you see double levels, the market will like to go back there. So that kind of gives me some extra information. But what I love about this is that we could literally hit this and we could get up here and get our target without ever breaking this market angle line, which is the angle of the sellers. If people don't understand what that means, that's the angle of the sellers. That's so you ideally, you don't want to have a target bigger than the angle of the sellers, because then you've got to break through all those sell orders. So that just looks like absolutely perfect, like the perfect setup as a swing trade for me. If we can get this entry, and what I love about this entry as well is, like, look at the clear interest in buying. Like, you can see it here, right? People are interested in buying in these areas. It's definitely reactive, and it just makes a lot of sense. So yeah, I mean, your choice now is, if you like the setup, is like, do I average in, or do I just try and get the best possible price and go in with my full risk at this price? You'll make the most doing that, but obviously the market may not come back. I'm going to check one more thing, and then we're gonna wrap it up there, because this could be the icing on the cake. But even if it's not, I've definitely decided I'm going to eat the cake anyway. So if we can get the icing, it makes the cake nicer. But let's see. So I'm going to check to see where is the fib target for the 4 hour. Interesting. It's a 7. No, it's a little bit lower. So we had a D there. We had 7.700. We're looking at an entry a little bit higher than that, so we're looking at there. So I don't think we're going to get the icing on this occasion. I do like this. I do like the look
that
of
would
this.
Be a pretty big spike, wouldn't it? If it did spike down.
Yeah. I think what is interesting here is Yeah, this is 75. What's our target? 70,
75, 75.
75, 75. Yeah. Yeah, I mean, it doesn't really put me off. Let me check. Let's see what the hourly's saying as well.
So now you're going for cherries as well.
Yeah, exactly. Yeah, and it's there. It's absolutely perfect. We have on the hourly time frame, we have a D, and this, for those that understand the fibs, the way this is a buy. This is the optimal buy. In fact, on the hourly, it's a 144 fade. There. You can see that, right, Gav?
Your favorite
understand how this
Fibonacci
works.
play. Yeah.
What's that?
Your favorite Fibonacci play.
This is my favorite Fibonacci play, absolutely. So a fast push down into our zone. If you've done the advanced course, you know this is an absolute peach of a trade. This is, yeah, textbook. So we've got enough there that makes it a very, very nice trade setup for me. I'm gonna consider whether I average in, but certainly if we can get to this, I definitely will have an order around there for sure. Yeah, and I'm going to be looking, if I'm going to average in, I'm going to be looking for my biggest order to be there. So if it doesn't pull back, we get a bit of a gain, but ideally we get that big push down there, and then I buy my biggest position there for that push up towards. You could go for 75, 75. You could do this even on a shorter time frame, guys. If you don't like swing trades, I'll give you one more option. You could place your stop below this low, and you could just do a simple target of the 38 or the 618. That would be absolutely fine as well. So if you don't want to wait forever for your trade setup, you can just go for that and be out. Stop there. That'll be like a 2-to-1. Or for those that are really, really brave, you can go for the tight stop and try and make this a 4 or 5-to-1. All right, and I better shut up now because otherwise I could do this all day long.